In this video, we're going to talk about supply and demand. I'm going to keep it very simple and easy for you guys to understand. I'm going to talk about the difference between supply and demand and support and resistance to start off with, how I mark my zones, a visual example of supply and demand versus support and resistance, how I do a top-down analysis, how I might start off with the higher time frames and why they matter, and then the lower time frames and the pros and cons of that. I'm gonna give you guys some examples, so take notes. If you have any questions, feel free to hit me up. I'm on Threads a lot. I'm always on Instagram, and you can, if I have this on YouTube or in the Discord, you guys can just text me in the comment section or in the Discord. So let's start off. Supply and demand. When I first started trading, I didn't understand the difference. You feel me? I thought it was both the same thing. I thought I outsmarted everyone. But with supply and demand, you're looking for an aggressive move away from a certain area. Okay, you want to see a strong move away from that level, creating an imbalance or inefficiency. This lets me know that we have institutional traders in that area. Okay, this is important because institutional traders have millions, if not billions of dollars. So if they enter the market, they can cause it to go up or down significantly. And that's important because if we return to that area of the market, there's a high chance that we're going to repeat the same thing we did previously. But with support and resistance, I'm not worried about the reaction. I'm more uh, I mean, no. I am worried about the reaction. I'm not worried about whether or not we had an aggressive move away from that area. Okay, so with support and resistance, we're trying to see, did price stall? Did we consolidate? Are we rejecting a certain area? Okay, so a strong imbalance away or move away from these areas of support and resistance is not required compared to supply and demand. And to give you a visual example of what I mean, let's just say the market is casually making higher highs and higher lows. And for some of you, you might know that's an uptrend, but if you don't already, you need to get used to identifying the trends that we are in, okay? Whether or not we're trending upwards or if we're trending downwards, okay? And if you don't already know how to do that, you need to go over the fundamentals, okay? I'll have future videos going over how an uptrend and a downtrend works and how you identify them. Same thing for consolidating markets. All of this will depend on how you approach the market, whether or not I'm trying to look for sell positions or buy positions. So with that being said, after this video, go learn the basics. I also have educational resources inside of my community, but cool, we're trending upwards, okay? This is a higher high, this is a higher low, then boom, we created a new higher high because this high is higher than this one, but we're never just gonna go straight up. We're gonna have a pullback, which is why this is considered a higher low because this high is higher than this one. Okay, so awesome. Now the market is never gonna go straight up. We might pull back a little bit, but generally the market's direction is up. Okay, but then all of a sudden, boom, the market just shoots down. If it does something like this, that means we have entered a supply zone or we created a supply zone because the only people that can push price down so aggressively is either institutional traders or some type of news event. Okay, but in this case, it's just supply. Now, for resistance, we might do something like this. We'll come up, right? But then all of a sudden, we kind of just stop. The market is kind of stuck in this area. And if that's the case, I can note that as resistance. Just because this is an area of resistance doesn't mean the market won't aggressively move from it though. After this consolidation phase, the market could end up choosing a direction, meaning it might shoot down or it might shoot upwards. So whenever the market is consolidating, just wait for the market to choose its direction. All right. Now, support and resistance would just be the opposite. Let's do it like this. Let's have it right here. For demand, we might be coming down, you know, we might not go straight down. We might pull back a little bit. But overall, the market is coming down and then boom, market shoots up aggressively. All right. If we do something like this, we've probably created an area of demand. If the market returns to this area, I want to look for some buy positions. All right. Then for support, it's literally going to be similar to resistance, but we might come down, and I won't drag it out. We might stall for a little bit, whatever. Y'all get the point. This right here is support. We can move on. And let's bring that down. I just want to have all of them in screen for you guys. Hold on. Boom. Supply, demand, resistance, support. All right. These are ideas of what it might look like. Okay. Now, how do I mark my supply and demand zones? It's very simple. And if you see my post on Threads, literally, if we, I just want to look at the green candle before the strong move down in order to mark my supply zone. And here's a picture of what that might look like. And for demand, I want to mark the red candle before the strong move up. And here's a picture of that. Isn't it beautiful? Isn't it just amazing? There's so many opportunities off these zones, which is why I want to share how to identify valid supply and demand zones. But something that's important is to know that if this candle is large, your zone is going to be huge, okay? Meaning your entries might be less precise if you don't know how to refine your entry. This is where a lot of people mess up because they don't know where exactly to get in. You probably had the right idea. You probably was like, oh, I seen price shoot down from this area. Let me just get in once we come back into the zone. But you can't just get in anywhere. We might not. You know what I mean? So I'll teach you that later in this video, okay? But higher time frame versus lower time frames. Just to keep this quick and simple, higher time frames are significant. It took more time for that zone to be created, but it's less frequent. After having a strong move away from the zone, we might not actively be creating, or like we might not actively be near that zone. Okay, so it's gonna take a while for us to get back to that zone, but when we do, there's a high chance of that trade playing out the way we want it to. If we're hitting supply, the market is giving us the reaction that we need to on these higher time frames, boom, we can take a great short position, and I might have swing bias or directional context on what might happen for a long period of time. Okay, if we had such a strong aggressive move away from this area previously and we're getting the same reaction that we had, then I might have a great idea of what's going to happen for the next couple of days, especially if I'm a swing trader. But for day traders, it's also great. It just raises the probability of my trade. Now, lower time frames are also good, but you just got to make sure you're getting the proper reactions. These are more recent. There's not as much history backing it up. So just make sure that you pay attention to the next few examples that I give you so that you know the difference between a valid zone and an invalid one. In this example, I want you guys to try to identify a valid supply zone. It's going to be a little tricky because I didn't let you guys know what makes a valid zone yet, but I will afterwards pause the video, try to identify it. I'm going to let the market play out. And also, this is just TradingView. You guys all probably know what it is. They have a replay mode that you guys can utilize, but you will have to pay like a little subscription. I think it costs like $9, but this can help you really test out certain strategies. You can just pick an area in the market and use the little replay things to practice. All right, but I'm gonna let the market play out. Now I'm gonna pause it right here. Okay, try to find where our supply zone was at. I'm gonna give you a couple seconds. It is right here. This right here is our supply zone. Okay. The reason why this is a supply zone is because before this, we were trending upwards. Okay. If you look to the left, boom, market was trending upwards. And then all of a sudden, what happened? We just shot down. Okay, this is a break of structure. Now, where did this break of structure occur? If we snoop down to the 30-minute time frame, it might be a little easier. And just to show you guys how I mark my highs and lows within an uptrend, I'm simply looking for a two candlestick pattern, you know, a move up and then a move down. So green candle, red candle. Highest point between those two candles right here. Lowest point between those two candles is right here. Awesome. Now we had a leg up, strong moves up. Where's our next high on this 30-minute time frame right here? Okay. Remember, green, red, highest point between those two candles. If I want to find my low, red, green, lowest point between those two candles. If I'm trying to find our highs and lows within an uptrend. Okay, very simple. Now, in order for a trend to continue, we cannot have a body close below our low. But what do we get? A body close. So right under this wick, we look to the right. This candlestick closed below my higher low. Okay, this is an indication that we have a break of structure. All right, and let's just write that out right here. BOS. We can make it black. Boom. Break of structure right there. Let's put that back to like a dotted line, make it a little thicker. So cool. Right there, we have a break of structure. All right. Now, before this break of structure occurred, we did have a fair value gap that was created on the way down. Okay, after the strong move down, we did create fair value gaps on the way, which is a good thing to note. But before I even do that, just to have it in the video, if I'm looking at a downtrend, in order to find my lower lows and lower highs, I'm doing, all I want to see is a move down, then a move up. So right here would be my low. And then in order to find my lower high, I want to see a move up and then a move down. So right here, lower low, lower high, and I just repeat that process, okay? So that's literally how you identify your uptrends and downtrends, just in case you didn't know how to do that already. But fair value gaps, okay? I love fair value gaps. I always use them. And how to identify them. Look at this first candle, skip the second one, go to the third one, and then you want to mark the first candle's bottom wick. All right, so you can put a line there or use a box. Skip the second candle and go to the top of the third candle's wick. That space in between is your fair value gap, okay? FVG. All right. This right here is a fair value gap. There's an imbalance that was created on the way down. There's a gap in the market. And on top of this fair value gap, we have a bigger one right below it. All right. This confirms how aggressive sellers are. Okay. Which is why I consider this a valid supply zone. Price pushed aggressively downwards. We broke structure, shifting the market's trend, you know? And on top of that, we created gaps on the way down. So this is what makes the supply zone valid. Now, let's just say the market comes back into the zone. I'm going to give you an idea of where I might enter the trade. Okay? You see that aggressive move down that we had? That's crazy. You know, this is beautiful. This is what I want to happen. You know, but let's go back a little bit and give you an idea of where I might enter. Okay? I might snoop down to like a 5-minute time frame, maybe even a 1 minute. But as you can see, look at these aggressive moves up that we had on the way up to this fair value gap. We had one, we have another, and we have this last one right here. So after all these aggressive moves up, you can see that it's getting smaller and smaller and smaller. All right. And then eventually we start stuttering. Now, this isn't just by coincidence. We just entered our supply zone. And previously, when we were at this zone, we did all this. Okay? So, if you were smart, right, and if you were in the market during this time, I might look for a short trade opportunity. Okay? Now, we can let it play out just a little more. We can see that we kind of went deeper into this gap, right? And in the extended version of this video, I'll let you guys know exactly where I would enter these trades within these zones and why. But for now, let's just say I got in around here, okay? I might have my stop loss somewhere over here, but in this case, let's just say we have it here, whatever. Now, what am I going to target, all right? As you can see, we had this let move up, all right? So ideally, I might want to target this demand zone. All right. Down here, this is a valid demand zone because, right? And this is hinting on how to find a valid demand zone, right? So let's just move this out the way. Demand zone, right? Three candles, three momentum candles pushing us upwards. We have multiple fair value gaps within this move up. On top of that, we were trending upwards before that. So after this demand zone was created, we broke this previous high. All right. Continuing the uptrend that we were previously in. So if we have a break to the upside, making a new high and continuing the trend that we were in previously, all right, this is a valid demand zone as well. All right. So some people probably were able to profit after this. Like maybe they seen these three momentum candles and then maybe they were able to take. I don't know. There was probably just a trade opportunity. But the reason why I might want to target this zone is because it's, how can I? What's the word for it? It's vulnerable. All right. This is a vulnerable demand zone because we have such a strong supply zone close to it, meaning the market might want to come down to it. But the first area that I might target after entering this trade, so again, let's just say we got in around here, right? The first area that I'm going to target is this fair value gap, okay? I might want to look for us to inverse this fair value gap, okay? Now, why? This is only a 5 minute gap, all right? This fair value gap right here, it's only a 5 minute gap. There's a high chance that we might inverse this gap, all right? Now, if we were to push through this gap and get a body close below it, the next target is this gap. I'm looking for us to inverse this gap and continue down. If we do that successfully, obviously my ultimate goal is to reach this 5 minute demand zone, all right? We've been, that's really it. I'm just looking for other key areas in the market that I know the market might want to go to. Literally, that's it. That's how I trade supply and demand. Let's see what happened afterwards. The market came far below it. All right, far below it. But you see, the whole point of this is just to show you how profitable you can, the amazing trades that you can get utilizing supply and demand zones. Now, vice versa, how do I find a valid demand zone? I already gave you an idea of a valid area of demand, but try to do it yourself, okay? All right, I did let the market play out a little longer than before, I believe, but look, we have a strong move up from down here, right? We were trending upwards, okay? We have a move down and then we have a strong move up. All right, you can see that the market did come down to test this area of demand, you could say, or maybe even support. But look at this red candle. Let's focus on this one. All right, this red candle, we're gonna mark that out. And this is one that we're gonna focus on just because we created a pretty big gap on the way up. It's three candles. A gap was created, an imbalance was created on the way up. If I drag this out to the side, I can see that this demand zone was tested and respected. All right. Now, why is this valid? Trending upwards after uh, pushing up and creating this imbalance, we broke this previous high. All right. Continuing that trend. And we even came relatively close to it, but that fair value gap held us up. All right. Remember, fair value gaps can also be used as support. Right here. Cool. Over here, we came down and tested it, and we bounced right back up. We came down into it again, and the market did hover above this demand zone. Now, if I see price holding above a demand zone, then that signals that this demand zone is still holding strong. All right. There are times where we might just end up pushing back down, but in this case, we were staying above this zone. We even came down to the bottom, right? Same thing like we did over here. Like after this red candlestick, we did come down, right? And again, we do have, you can kind of count this area as demand too, or just support, So there's multiple, this whole area is just strong, all right? You know, like when we have these little pivots, like right here, you can see like we did have some type of resistance. Something that you should also know is that resistance flips into support, all right? So after we break through it, the market tends to come back down into that general area and test it and use it as support. So honestly, we have this demand zone and just a bunch of support below it, making this zone even stronger. All right, that's another reason why this demand zone is valid. This is a lot of helpful information, man. I'm not gonna lie. So if you guys do want the extended version on where I would exactly enter these trades, join the Discord. I would love to help you guys out. If you guys want to learn on a deeper level, I have two communities linked in the description, which is coffee, candlesticks and coffee, and then sincere trades. All right. I'm a part of Candlesticks and Coffee, and that's where you can get access to other analysis. We even have a retired risk manager in there. So he was trading with market makers, and if you don't know about your market participants, we have retail traders. We have, retail traders are like people like me and you who trade using our own money to make a profit. We have institutional traders, and then we have market makers. These are the people who make sure the market is doing what it needs to do. They're making sure that there's always someone on the opposite end of your trades, okay? But if you are looking to work with me directly and kind of just have more access to me, that's what Sincere Trades is for. Take a look at them. I believe they will be helpful. And if you guys have any questions, if you want access to like free PDF guides and more free videos, I'm going to be posting frequently. This is my first video, okay? My name is Julian Sincere, or Jay Sincere, whatever you guys want to call me. Hopefully you guys found this video helpful, and I'll catch you on the flip side.